Hey, welcome, guys. It is Monday night, August 25th, in preparation for Tuesday, August 26th, trading day. Um, we are finishing, or not finishing, we're still continuing to go through Viewpoints of the Commodity Trader by Roy Longstreet before we get into a little bit of market analysis here today. All right, do you allow for error? Margin is the minimum capital required by a broker to finance a trade. This figure is usually set by the clearing association, but it but but is a small fraction of the price of a commodity. July corn may be $1.15 per bushel. The broker may ask only 50 per bushel as margin. This means additional capital will be required should the trade move adversely. Many traders, particularly the uninformed, make the mistake of depositing only the minimum margin requirement. For many, this results in disaster. Either it sets in motion the habit of putting up more and more capital as the price moves adversely, or equally bad, it results in a hasty decision based on fear. Fear must be overcome, and bad habits must not be permitted to develop. I find it best when calculating the capital requirements for a trade to allow for errors, errors in judgment plus chance errors. This policy has proved itself many times. When the war erupted in September of 1939, I was short in the market. Had I not allowed for the possibility of war, I would have been closed out of a disaster out at a disastrous loss. The market went up the limit on 3 successive days. Actually, my power permitted me to sell more at the top of the market. I came out of it with a nice profit on the drop in October. For purposes of keeping daily score, regard the margin required as being constant. Changes in price result in changes in equity. These changes should be adapted to or subtracted from your capital. It is important, all right, it is important to always allow, I'm sorry, it's important to always keep in mind that your margin is committed. It cannot be used to finance any additional trades. How much of your capital will you have on deposit with your broker is an individual problem. Pros can get by on less than beginners, and I strongly recommend that you always start with more than the minimum required for margin. The most successful traders allow for chance error as well as calculated error when financing a trade. And the way I interpret that, guys, is on our accounts, if they require that $2,000 or that $3,000 buffer, obviously leave a bigger buffer in there. In other words, try and allow for those bad days, those trades that may go adversely against you, things like that. All right, the next chapter is power. Power. Whenever Maris or Mantle appears at bat, we are reminded that they have power. Other players have power too, but less so. We all have power to some degree. The problem is to know how much we have at any moment and how best to use it. When I left the farm to attend high school in the city, I had plenty of vim, vigor, and vitality. I could run rings around the city boys in athletics. I made the teams easily, but my city pals did much better than I later in the season. One of the most valuable lessons in life was taught me in the close game when the coach let me sit on the bench while he pointed out to me the ability of our top scorer. This chap was not wearing himself out by always running at top speed. He always seemed to have the ability to just I'm sorry, he always seemed to have the ability to do just a little bit better when the chips were down. He waited for his chance and then gave everything he had. When keeping score in commodity trading, one must always know what he can do next. This means knowing your gross and net power. Gross power is calculated by taking your capital and subtracting the margin requirements to carry open trades. For example, if you have 2,000 capital and an open trade of 5,000 bushels of corn, which requires 400 margin, then the gross power is 1,600. Net power is calculated by subtracting from the gross power the capital that may be required to carry open trades through possible adversity. For example, should your gross power be 1,600, and should you anticipate the possibility of carrying one contract of corn through 60 adversity, then your net power is actually 1,300. This amount represents the only money that you should have to enter another trade. The balance of the 2,000 capital is committed. Like a general in war, there are two great mistakes that a trader can make. First, he can lose all his capital. Second, He can fail to take advantage of an opportunity. And all of his capital is, if all of your capital is committed, he does not have the net power to fully exploit unexpected changes. The most successful traders are always in a position to take aggressive action. And I like that. Say don't keep pushing the throttle on all of our trades. Have something there that if you're in a trade and then you see that opportunity to then push the throttle, or it adversely goes against you and you can scale in, then you're not taken out for that day, on your margin and stuff. So, all right, the next one is net power, which we'll get to on the next video. Let's jump into my notes here on okay. On the 14-40 minute chart here on the ES, I have things here. Okay, so I think this is what Trader 71 had as a zone here. It's interesting that we went dipped down below it, kind of closed back up here, dipped below it, and then immediately shot up against that. Today we actually ended up being down day, even though we kind of started up in the day and then we closed the day down. But this 5 SMA buy that set up here by this 8 days of extended run close above the 5 SMA, and then this first close below it. The model did not have a stop. It just said, okay, you go long at the close below it for a close back above it. Even if it closed back above it down here, it'd be a minor loss. This one actually happened to be a small gain here on that. So the 5 SMA did play out on that. Today we had an NR7 narrow range. I'm sorry, NR4 narrow range of the last 4 days developed there. The T-vol chart. Let me go to that. Hang on. Okay, so this is where I had the SPY. So this is the SPY. We did close towards the lower end of this bar, left a little tail up above here, close towards the end of this bar. If you remember, this blue horizontal line here is that 642.34 on the SPY, which is kind of the cash settle prices. That 3 bar, we tipped barely above it, almost like a false breakout, and now we're back down testing those lows. So we end up having a low of 642.35. So 642.34 versus 35. In the Globex session, it looks like the market's kind of come down a little bit further, but we'll have to watch this to see on open where we open. Yes, I believe it is possible, if we open up down here on this 50% retracement, to possibly have a little bit of a bounce there. However, if we're back below this 642.34 line, I would be inclined to look for short ideas, and yes, I want to be conscious of a potential bounce here at the 50% if we do get there. But again, if we're below this level, I would be looking for short ideas myself. The VIX, let's see, where do I have the VIX at? Oh, those internals, let me pull that back over. Okay. So the VIX, we did come down here. Let me, I'm not going to really spend a lot of time on this, so I'm not going to really zoom in on it. But we did come down, kind of touch the low end of that VIX, came in at 1424, and that green, that 3 points down is exactly 1424. Well, it's interesting. We came down to that low, 1424, and bounced off it and you can see here on the 5-minute chart, this was an extreme gap, tick zone that I had there that we were balancing off of. And then this morning, as we opened up, oops, too far. Opened up, kind of did that hit off the bottom of that, and that's where I kind of got long here. Jacob got long somewhere in here on these spike downs for that move up off of that. We did come up here and almost touch the top of that zone before we started falling off the rest of the day. Buddy was long here, short here, long again here, short again here, and then long again here, and then short again here, I think. Something like that. But I'm just having fun. All right, so the on the gap chart, let me pull the gap chart over, which is again that intraday price action here. Oh, nope. Sorry, that's not the, which chart is it? Oh, there we go. Okay, so on my 15-minute chart here, you see that we yes, on my janky uh LBR, I mean Keltner channel, the LBR Keltner channel. On the Keltner channel, which is the blue, this middle dotted line is the mid Keltner channel. We kind of went up above it, then we failed below it, hit below it, and kind of rode from basically 1:30, in the afternoon time on. We kind of just tapered off under that. So it's interesting. We did this big spike up, come back down, hit off of it, then we opened up back below it, and we failed to even do this full gap fill, today, and instead we tapered off. So that is a very, very interesting picture in conjunction with. So today I had as a buy day. Tomorrow, due to the 2-period rate of change and the Taylor trading system and things like that, I have that set as a sell day potential for tomorrow. So again, depending on where we open on that SPY, depending on how this is doing here, I have it set up as a sell day. So again, even though I'm aware and conscious that we could get that 50% bounce a little bit there, I'm going to be looking a little more short-minded if we're back below that 3-bar breakout, just the way I'm thinking, this market action. So, but hey, trade safe tomorrow, guys. Let's take good trades. It hopefully will be a better environment than it was today. A little bit tough this morning for sure for everybody. But let's try and help each other out tomorrow and call these things out. All right, I think that's all I have here. So we will follow up tomorrow. Thanks, guys.